If you're tired of chasing trades and you want to get ahead of the next big move, you are in the right place. I am breaking down last week's market moves and the setups that I'm watching going into this week so you can trade with confidence and not with confusion. My name is Derek from the Legacy Profits Club, and if you're on a mission to master trading and you want to build real freedom in your life, you're in the right place. Also, if you want these insights delivered straight to your inbox every single Sunday, head to the link in the description and sign up for the free newsletter. Let's dive in. Okay, so if we take a look at SPY, you can see up here, this is when we gapped up in the middle of the month or the middle of last month. And you can see that ever since May 12th, we've been trading in this fairly tight range here between around 575 and 595. So it's been stuck in like a $20 range for quite a while now. The market is just rebalancing after having a very substantial move up, pretty much like a V-shaped recovery from all of the selling back in April. And so we have been moving up faster than the market has moved up in a really long time. And so now the market is finding its footing. It's trying to figure out what it wants to do next, and it's waiting for a catalyst to kind of set off the next move. And right now, we're just kind of sitting in this range-bound price action until we figure out what's going on. You can see a very similar thing on QQQ, which I'll show you in the charts in just a minute. So what I would be watching here is I'd be watching to see whether we start to break lower from these areas or if we start to break out. If we break out, it'd be very, very easy to see us hitting all-time highs in the S&P 500 pretty soon. I don't think it would take very long to get there once we break out of this range. And obviously, if we break down to the downside, there's a gap to fill all the way here, just like there was last week in our video, all the way here to about 567.50. So that would be the next support level if we break out of this range to the downside. And then if we break out of this range to the upside, 613 or so is going to be the next resistance level at all-time highs. And so the things I would be watching here is I'd be watching these levels here at around 575.60 all the way up to this high here of 595.54. As long as we stay in this range, I'd be really, really careful with my trading, understanding that it's fairly range bound, and I wouldn't want to hold on to anything too long until we determine what we want to do with this range here. Overall, when it comes to the SPY chart, I still remain fairly bullish because of some other reasons that we're going to talk about here in a few minutes. So I wouldn't be personally surprised to see all-time highs before we, if we retrace or go down. I wouldn't be surprised to see all-time highs first, but time will tell. And don't ever judge anything based on bias. Always judge things based on what's going on in the market. So the levels that you really want to watch out for are going to be this area right here around 556. If we drop down below 556, that's when we have broken below the most recent higher low in this uptrend, and then we could see some more serious downside. But as long as we hang out above that level, even if we break out of this range to the downside and go down and fill this gap, it's not really alarming, and it doesn't really change the big picture of the market until we start trending in a different direction. With that said, let's take a look at some of the levels on QQQ as well. So on QQQ, you can see that the chart looks very, very similar to SPY. All-time highs are up here at around the 540 level or so. And we're kind of ranging here between around 505 and 525. So again, $20 range, just like the S&P 500. So the levels that you want to watch here are this candle low here, a 501.48. If we dip below that, wouldn't be surprised to see us fill this gap all the way down to 491.54. And if we can break out above this most recent high from last week at 526.48, I could see us hitting all-time highs in the 540s sooner rather than later. Again, this chart still looks fairly bullish to me, but keep in mind it's range bound, and we're trying to figure out where we are going to break first. Warning levels or flags start going off if we break below this low here of 476.78. That's when we break below the trend line, and then, we're no longer above our most recent higher low, and that's when we want to get concerned and maybe reconsider our thesis. But until then, my thesis still leans bullish. Let's talk about why, okay? One important thing to keep an eye on when you are gauging the markets and you're gauging the strength of the markets is you want to keep an eye on Bitcoin. Now, we had some interesting things happen in Bitcoin last week. I'll throw up the Bitcoin ETF here, and you can see that since we topped out on the 22nd, on the Bitcoin ETF, we've been kind of selling. This has been following the market. But actually, if you look at the Bitcoin charts, we were making like some decent highs last week, and the overall trend line on Bitcoin was going up. And so one of the ways that you can look at Bitcoin and you can gauge Bitcoin is you can gauge risk by Bitcoin. Because when people have extra money, when they're feeling confident in the markets, they do more risky trading, and cryptocurrency tends to be a more risky way to trade. It makes bigger swings and stuff like that. So when you see a lot of money flowing into cryptocurrency, specifically when you see a lot of money flowing into Bitcoin, which is the leader, that's when you know that people's mentality is generally feeling more or less risk averse. They're feeling more ready to take on risk. And so even though the market has been balancing, what we saw last week was there was a willingness to take on more risk in the market. And this was especially something that you could tell when you would look at a lot of the small caps. When you looked at small cap names, a lot of the ones with catalysts that were getting some big moves in the pre-market, those moves were actually continuing throughout the day. So if you're a swing trader and you swing small caps like I teach in my course here on YouTube, and that I use all the time myself personally, swings have been playing out really, really well because the risk is on in the market from as far as retail trading perspective and stuff like that goes. The other thing that's important is like when you have seen names that have had intraday catalyst, particularly intraday catalyst related to cryptocurrency, those names have just really taken off. One of the prime examples of this from last week is SBET. All SBET did was they announced that they had an Ethereum reserve, and it did this. Literally, my community got into a trade around the $36 to $38 level, and this went up to $120 by Friday. So we're talking about massive, massive moves. And the times that you see moves this large on news that is just kind of like, okay, you've got an Ethereum reserve. And, like it's really not a huge catalyst, but for it to move in such a massive way, that tells you that there's a lot of risk on in the market right now, which is why I continue to kind of lean overall bullish in the market until the sentiment in the market, particularly the sentiment in cryptocurrency and Bitcoin, starts to shift. If that starts to shift and the market starts to go lower, that's when you want to start looking at, okay, maybe I should rethink my thesis. Let me give you a couple of quick trade ideas that I've got for you here. One of those would be QFIN. This is a fintech company out of China. QFIN, you can see that they've been kind of ranging in this area here between $35 and $48. So about a $10 range or so, $10 to $15 range that they've been trading in for a while. Just to give you some information about this company, they are a Chinese fintech company. They have recently had earnings beats. They've recently had revenue beats. Their guidance has been all right. The other thing about this company that I like about them is they actually give you a 3.5% dividend. And so this is a great trade for me as far as like options trading goes, particularly selling options, covered calls, cash secured puts, the wheel strategy, stuff like that, because not only are you going to get a dividend and you're going to get the growth if you own the shares, but you also can bring in some regular income by selling options as well. Another thing to know about this company is that they've had double-digit EPS growth over the last couple of years, so their earnings per share are growing. Over the last 2 years, they've actually raised their dividends. So I just like this in general as a company that I'm putting into my portfolio for the long term, but particularly selling options on this. So if you look right now, they've sold for the last few days. They've dipped below the 50 exponential moving average, and the RSI is oversold, and they're trading around $41 or so. And so if you look right now at cash secured puts on QFIN, you're going to see that they're going for July 18th expiries for around 75 cents or so per contract. And so you're talking about $75 in cash in your pocket on a company that's trading for around $40. That's if you do 35 puts. So I like this company as a potential idea for the wheel strategy. So I wanted to put that one on your radar. And then the only other trade that I really wanted to give you to look at this week would be AVGO. This is Broadcom. And if you look at Broadcom right now, you can see that they are having quite a move up. And if you zoom out to the weekly chart here, you can see that we are very, very, very close, within about $10 from all-time highs. So why is AVGO on my radar this week? Well, because they have earnings on Thursday after hours. And AVGO is an industry leader. And so when they report earnings, they have a lot of attention. And so what I wanted to do was I wanted to talk to you about, if I were going to play AVGO, I would look at them on Friday. I wouldn't try to gamble the earnings. I wouldn't try to guess what's going to happen on Thursday. And I would definitely not try to trade things in the after hours when the volume is lower and you have to put in limit orders on everything and stuff like that. It's just a lot riskier. So I like to wait on earnings plays until the next day, let the liquidity of the actual market hours come in, and then take trades. And so there's a couple of options that could potentially happen on Thursday. And so I want to talk about both of them. What I would be looking for when I'm watching earnings, I'm looking for three things. I'm looking at their earnings per share. Did they beat or did they come in under their estimates? And if they came in under or over, how big of a difference was that between what people expected? I'm looking at the same thing on revenue. And then the final thing that I'm looking at is I'm looking at guidance. Did they increase their guidance? Did they keep their guidance the same, or did they lower their guidance? And so out of those three things, in an ideal scenario, what you're going to get is you're going to get an earnings beat, you're going to get a revenue beat, and you're going to get a guidance beat. And if you can get all three of those things lined up, like the more of those things you can get lined up, the better, and the higher likelihood that your trade is going to follow through eventually. But even if you can get a couple of those things in line, then it's especially on my radar to trade on Friday. So you're going to get a couple of scenarios with price action, but keep in mind, price action apart from the catalyst doesn't mean a whole lot. And so you want the catalysts in place as well, because you want the likelihood of your trade to work out. You want to do everything you can to get the likelihood of the trade working out in your favor on your side. So let's say they have at least a couple of good things happen on Thursday. Then what am I going to be looking for? Well, on Thursday evening into Friday, there's going to be a couple of scenarios. One would be we end up gapping up into all-time highs, okay? So if we gap up into all-time highs, what I'm going to be looking for is I'd be looking for potential continuation. I'd be marking the pre-market high, I'd be marking the opening range high, and I would be looking for entries to the long side once we break out of those numbers to continue, because you don't have a lot of overhead resistance. And so the likelihood that you're going to smack into resistance and then get slapped down gets lower when there's nothing above it to even worry about. And so that's one of the ways that I would look at that trade. And then the thing to keep in mind when you're looking at trades like this is you want to know that when you're entering into all-time highs, since there's no resistance levels to look at, you have to think about psychological levels. So if you're thinking about potential resistance levels, if you're thinking about where to take profits, you want to do that at kind of like round numbers, okay, because of psychological levels. The other potential scenario that could happen is we get some decent news, but we gap down and it becomes kind of a sell the news event. Well, what tends to happen on those sell the news events is it tends to gap down towards the support level. People take their profits on the good news and the stock sells. And then after people have had time to process the news and realize like, oh, that news was actually pretty good, then buyers step in and they begin to drive the price higher. So if that's the case, if we end up gapping down into a resistance level, or a support level, like let's say we end up gapping down here to this gap high here of 211.16 and we fill that gap. Well, now what I'm going to be looking for if we gap down into resistance is I'm going to be looking for a potential recovery play, or I'm going to be looking for a potential trend day to the upside to set up after all of the profit taking is done. And so what I would be looking at is I'd be looking at the opening 15-minute range and waiting for us to break out of that. And then I would want to go long, take profits along the way in anticipation of a trend day to the upside. The third, and I would say less likely scenario, is that you get some good news that gaps up into the all-time high. And in that case, you're going to just want to wait for confirmation before you do anything with that. But those are the main plays that I'm looking at going into this week. Cash secured puts on QFIN, and then the earnings play on AVGO this week. Hopefully that gave you some trade ideas. I'd love to hear your trade ideas as well. So go ahead and put those trade ideas in the comments. If you found this video helpful for you, hit the like button, hit the subscribe button. That not only helps me out a ton, but also it helps make sure that you're not going to miss anything when notifications come up that I put new videos out. I try to help people out all the time with educational videos, with videos about what I see going on in the market so that you can make informed decisions. And again, if you want trade ideas, if you want market insight, and if you want education straight into your inbox, head to the link in my profile, sign up for my free newsletter, and let's have a great week. I'll see you next time.